Hey everyone, hope you're having a nice weekend, and welcome to another episode of Whiteboard Invest Crypto News. To save you some time, let's dive straight into today's top headlines from the world of cryptocurrency. First, BTC Price Update. We'll cover the latest Bitcoin price movements and what they mean for investors. At next, global rate cut juggernaut is struggling to start. Insights into the challenges central banks face in initiating rate cuts amid economic uncertainties. Moving on, Russia's Putin sets out conditions for peace talks with Ukraine. Key developments in geopolitics impacting global financial markets. Meanwhile, Taylor Swift's London Eras Tour could delay Bank of England rate cut, analysts say. Analysis on how cultural events, such as Taylor Swift's tour, influence monetary policy decisions. Next up, Donald Trump. The future of crypto and Bitcoin will be shaped in the U.S. Discussion on former President Trump's stance on cryptocurrency and its potential market impact. Lastly, Cardano to hand over $682 million Treasury to the community. Details on Cardano's upcoming transfer of funds to the community and its significance. All right, now let's delve deeper into each of these intriguing stories. Sit back, relax, and let's explore the dynamic world of cryptocurrency together. Today, Bitcoin's price stability at $66,200 reflects a crucial technical level. From a technical analysis perspective, Bitcoin has shown resilience around this price point, forming a short-term support level. Traders are observing whether this support holds, which could indicate a continuation of the current range-bound movement or a potential breakout. Key technical indicators such as moving averages, MA, are also significant. For instance, the 50-day MA has recently crossed above the 200-day MA, signaling a bullish crossover known as the Golden Cross. This typically suggests strengthening upward momentum in the medium term, although confirmation through sustained trading volume is essential. Moreover, the Relative Strength Index, RSI, a momentum oscillator, is hovering around the neutral zone of 50. This indicates balanced buying and selling pressure in the market. If the RSI moves above 50, it could signal renewed bullish momentum, whereas a drop below 50 might suggest potential weakness. Institutional interest remains a crucial driver. Continued accumulation by institutional investors, as evidenced by increased Bitcoin holdings in institutional wallets, reinforces confidence in Bitcoin's long-term prospects. However, regulatory developments globally, particularly in major markets like the US and Europe, could introduce volatility. Overall, while Bitcoin maintains its price stability today, traders are closely watching technical levels, indicators like the MA crossover, and market sentiment to gauge the next directional move. It's a pivotal time for both short-term traders and long-term investors to stay informed and adaptable in their strategies. So, stay tuned, stay informed, and let's see where the crypto journey takes us next. Today we're diving into the latest trends in global central banking and how they could impact crypto investing. The recent report suggests major central banks in countries like the UK, Australia, Norway, and Switzerland are holding off on interest rate cuts despite earlier expectations. This cautious approach, due to uncertainties in inflation and economic conditions, could have ripple effects on various investment sectors, including cryptocurrencies. Now, what does this mean for crypto investors? Well, traditionally, cryptocurrencies like Bitcoin have been seen as a hedge against traditional financial systems, especially during times of economic uncertainty. Central banks holding rates steady might signal stability in the broader financial markets, potentially dampening some of the urgency for investors to flock to digital assets as a safe haven. However, it's crucial to note that crypto markets often operate independently from traditional financial systems. They can react differently to economic news, sometimes even seeing increased activity when traditional markets show signs of volatility or caution. So, While central bank decisions may influence overall market sentiment, the unique characteristics of cryptocurrencies, such as decentralized nature and global accessibility, continue to attract diverse investors looking for alternative opportunities. As always in crypto investing, it's essential to stay informed about global economic trends, but also to recognize that digital assets operate on their own dynamics. This balance of understanding macroeconomic indicators while appreciating the unique aspects of cryptocurrencies can help investors make informed decisions in an evolving financial landscape. Next, let's talk about the latest news about the geopolitical tensions between Russia and Ukraine definitely catches our attention in the crypto world. Vladimir Putin's latest conditions for peace talks, demanding the withdrawal of Ukrainian troops from occupied territories, could have implications for global markets, including cryptocurrencies. Here's the deal. Geopolitical instability often drives investors towards safe haven assets, and historically, Bitcoin has been considered a digital gold in times of uncertainty. So, any escalation or de-escalation in conflicts like this can sway investor sentiment in the crypto market. Putin's insistence on territorial concessions and Ukraine's firm stance against them creates a deadlock that might prolong market uncertainty. If tensions escalate, we might see increased volatility in crypto prices as investors hedge against traditional markets. On the flip side, the exclusion of Russia from international peace talks, like the upcoming summit in Switzerland, could indirectly impact the crypto market. It shows how geopolitical events can shape global perceptions and affect investor confidence across all asset classes, including digital currencies. For crypto investors, it's crucial to monitor these developments closely. While cryptocurrencies offer unique opportunities due to their decentralized nature, they're not immune to broader market movements influenced by geopolitical events. So, keep an eye on how these geopolitical tensions evolve and consider diversifying your portfolio to mitigate risks associated with external factors beyond the crypto sphere. As always, stay informed, stay diversified, and make decisions based on your investment goals and risk tolerance. Now, let's talk about the latest news about Taylor Swift's Eras Tour, and its economic impact is quite interesting for us in the crypto community. The idea that a cultural event like a concert tour could potentially affect monetary policy decisions, such as interest rate cuts by the Bank of England, shows just how interconnected different sectors of the economy can be. Here's why this matters for crypto investors. Events that stimulate consumer spending, like Swift's tour, can influence broader market sentiments and economic indicators. When there's increased spending on services like hotels and restaurants around these events, it reflects positively on economic activity, but can also impact inflation metrics. Investment bank TD Securities coined terms like Swiftflation and Swiftonomics to describe this phenomenon, highlighting the significant economic boost these concerts bring. Now, while this may defer a potential interest rate cut, it also signals resilience and activity in the economy, which can have ripple effects on investment decisions across various asset classes, including cryptocurrencies. For crypto investors, understanding these dynamics is crucial. While digital assets are often seen as independent of traditional financial markets, they're still influenced by broader economic trends and investor sentiment. Events that drive economic growth and consumer confidence can potentially attract more investment into cryptocurrencies as a hedge against inflation or economic uncertainty. So, as you navigate the crypto market, keep an eye on not just monetary policy news, but also on cultural and economic events that can shape market dynamics. Swift's tour is a great example of how unexpected factors can impact financial decisions, making it important to stay informed and adaptable in your investment strategies. If you enjoyed this video, don't forget to leave a like and subscribe. Your support means the world to me and keeps me motivated to bring you the hottest news updates every day. Next, the news about Donald Trump's evolving stance on cryptocurrencies is quite intriguing for investors in the crypto space. Trump's recent declaration to end the Biden administration's adversarial stance towards crypto and his newfound support for Bitcoin signals a significant shift in U.S. political attitudes towards digital assets. This shift could potentially have profound implications for the crypto market. Previously, Trump expressed skepticism and proposed strict regulations on cryptocurrencies, which dampened investor sentiment. However, his latest statements advocating for a more crypto-friendly environment in the U.S. could inject new optimism into the market. From an investor's perspective, Trump's pledge to protect Bitcoin ownership rights and his opposition to excessive regulations could foster a more conducive regulatory framework. This could attract more institutional and retail investment into cryptocurrencies, boosting market liquidity and possibly driving up prices. Moreover, Trump's stance against central bank digital currencies, CBDCs, aligns with the preference for decentralized digital assets like Bitcoin. This could further solidify Bitcoin's status as a safe haven asset and a hedge against inflation, especially in times of economic uncertainty. It's important to monitor how these developments unfold, as they could shape future investment strategies in the crypto space. Investors should remain vigilant and adapt their portfolios accordingly to capitalize on potential opportunities arising from evolving regulatory landscapes. In conclusion, Trump's pivot towards supporting cryptocurrencies represents a significant shift in U.S. policy and could potentially fuel the next phase of growth for digital assets. As always, stay informed, stay engaged, and keep an eye on regulatory developments that could impact the crypto market. Last but not least, let's dive into some exciting developments from Cardano. The upcoming Treasury handover and governance upgrades are pivotal for the ADA ecosystem. Cardano's decision to decentralize control of its substantial $681.9 million Treasury through the Chang hard fork is a bold step towards community empowerment. This move not only aligns with the ethos of blockchain decentralization, but also enhances transparency and inclusivity within the network. Unlike many blockchain projects, Cardano's treasury solely consists of ADA tokens, emphasizing its commitment to the native cryptocurrency. The introduction of Voltaire under the Chang upgrade is particularly intriguing. It promises to revolutionize governance with features like Plutus v3 for advanced smart contracts and CIP 1694, enabling ADA holders to vote on network proposals. These developments not only bolster Cardano's technological prowess, but also signal its readiness to compete in the evolving blockchain landscape. ADA's recent market performance, with a significant rise in value over the past year, reflects growing investor confidence amidst fierce competition from platforms like Solana. Overall, Cardano's strategic focus on governance and innovation positions it as a strong contender in the blockchain space. As an investor, keeping an eye on how these upgrades unfold could offer insights into potential growth opportunities within the ADA ecosystem. Stay tuned for more updates as Cardano continues to pave the way for decentralized finance and smart contract adoption.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.